Yeah,
Okay, so let me back this thing up. Let me go to the hour. Yesterday when the market opened.
Oh, I might get into that. That's good.
So yesterday when the market opened, it pushed up, right? Y'all see that? Okay, so let me back up to the Saturday call. On the Saturday call,
Why are you emphasizing Saturday call? Like, okay, we get it. Some people don't get on the Saturday call. We get it.
Can I go ahead?
Stop beating up the people in the back.
You guys feel a certain type of way that I missed in the Saturday call, then just ignore me saying the Saturday call. But I'm just explaining my thought process. So on the Saturday call, I was telling folks that I'm biased for UJ to buy up, right? So if you think about this, I don't know how you guys or what tools you guys use or whatever, right? But if you go back to when this huge up move started in March, you have an impulse move, you have a pullback, we have another impulse move, we have a pullback. So I'm expecting another impulse move. Are you guys tracking that?
Tracking it?
Yeah.
You understand where I'm coming from?
Yeah.
So there are a couple of things that you can do here. You can run a Fibonacci, and I don't know if you guys use the Fibonacci, but it measures pullbacks, right? If I measured the Fibonacci from this original impulse move to the top of the market here, I would have expected a pullback to come back to this level, right? I think we were well on the way to do that until we got that jobs report. So the jobs report cut the retracement off, and now the market is going to push higher. It's not really a big deal, but it's just something to look at, something for you to understand. So if you're just measuring pullback to pullback, from the last impulse move to the top of the market, the pullback was at least at the 50% mark. You see that? Price came past the 61.8. So we actually had a good pullback. That's what I want to show you. The pullback is legit. So once you get that pullback into the golden zone, there is a line of thought out there. In fact, let me show you. There's a line of thought. Some people who trade the Fibonacci only, they feel like once you get a pullback into the golden zone, then you can target the negative 27 extension. So this would be your target right here. You understand that?
Yep.
Okay. So if you were just a Fibonacci trader, you could take your target and you can line it up right here. Boom. And then you can just put your buy order in and you can wait until it hits your take profit. I do believe that price is going to get to this level, right? I think price will probably get to my dotted line eventually. Maybe by the end of the year. I don't know. I don't know how long it'll take, but I do believe I'm bullish on the dollar against the yen. The yen, by the way, is the worst economy out there. So because I'm bullish, I'm going to drop down on the daily chart. Y'all see this bullish order block, right? Y'all identify that order block as a bullish order block?
Yes.
Okay. So what I like to see and what healthy price action dictates is that when you get an order block, this candle should either come back and tap in to this order block, or it at least should come back to the level of this wick to be considered as healthy price action. If not, you're going to get a fair value gap, just like you guys were talking about. Right? You understand that? Right. Everybody tracking that?
The wick of the bullish, the last bullish candle.
No, the wick of this, there's a red candle. This is a 3 candle series.
Yeah, I know.
What's that?
I know, but you were just hovering over the bullish candle. That's why I was asking if it's the bullish candle or the red wick. Which wick are you talking about?
This red wick.
Okay.
When we discuss price action, we want to take a 3 candle series. So we're going to take this red candle, the green candle from Friday, and today's candle. So the green candle from Friday closed up here, which means I expect the price to start here and push down at least to the tip of this red candle. And y'all see the price over there to the right, 134.42, right?
Yeah.
Okay. So that's where the setup, where my understanding of the market led me. So I said, look, I think that price needs to come to this level.
Would you count that as a tap in to the bullish order block via the wick then?
Well,
Because tap in for the wick, not the body.
I think we have to count it as a tap in, because that's where the price, that's healthy price action. So you would have to count that as a tap in. But I'm not suggesting that you automatically jump into a trade at that point. But I want to talk about just because I expected price to come to this level, right? At least this level, didn't mean that I'm just going to jump in for a sell trade. So I watched this last night, right? I watched this trade when the market opened. This is exactly what happened. It came and hugged the line. Then it pushed up. Then it started creeping towards this line. Okay, right there. Right there on this bearish order block. It happened this morning.
Bring it closer together, please.
You said bring it closer together?
Yeah. Yeah, there we go. Thank you.
So this bearish order block happened this morning. And in my swing traders chat group, I said, hey man, I'm going to short UJ, down to my area of interest, right? I think I told them 134.29 is where I was looking to take the trade to.
Wait, hold on real quick. So all this is after over the weekend or after market session, right? All this consolidation, this tight consolidation.
This consolidation is just from yesterday's open to this morning. You see this morning, see the time on this candle?
I can't really see yet, but I'm listening.
It's August 8:09 in the morning. It's New York time.
So that's going down. But what about, I'm talking about prior to that? That was London session?
Yeah. This was London session. So I looked at it last night and all it was doing was consolidating. So I didn't trade this. As a matter of fact, last night I traded U-Chef, but that's another discussion. But it was the same action on U-Chef. It was a sell. But anyway, once this bearish order block popped up, I told them I was going to sell it. So all I was waiting for was this price to push up to give me an entry. So once this price pushed up, I took my entry, right? I didn't get in at 135.21. I got it at 135 flat, right?
You're entering on the 1 hour, or you're just looking at the 1 hour?
I'm just looking at the 1 hour. The 1 hour tells you everything you need to know. So if you this is what I mean by that. Bearish order block, right? You see that? That's your bearish order block. This next candle that pushes up, it gives you your entry. So you want to enter at the top of this candle, of this bearish, of that green candle. You see it? This green candle tapped in, then this candle opened up and it tapped into. You see that?
Right. Let me zoom in. Hold on one second. One second.
You know how your that guy does the US 30 tap-ins with the fair value gaps?
Yeah, no, right.
So this is basically the same thing. Like if you draw a fair value gap between those two blue candles, then there would have been a gap with on that bearish candle, that big massive bearish candle, and that's where prices filled the gap and then tapped it, and then the other bearish candles tapped in and then pulled down.
Pull it up. I mean, zoom in because I couldn't see. So Ty, you're talking about order blocks, right?
Yeah, this is an order block. You see that green candle?
The green candle, right? So you marked up that green candle before the push to the downside.
Yeah.
Right?
So listen.
Okay. No, I'm just trying to make sure because you're on a higher time frame, so I have to read it differently now. So you marked up that green candle to see what the next 1 hour and the next 2-3 hour candles do. So if you marked it up and that third candle, so you got 1, 2, 3 tapped in.
Right.
Right. Okay.
So let me go back to something. I don't give a darn what time frame. You could be on a 2-month time frame. It doesn't. You could be on a 2-minute. It doesn't matter. The time frame does not matter. What matters is this is
in a way that matters. Don't you have to read it in a way for you to understand on specific time frames?
No. What I want you to understand is this is a bearish order block. I saw it on the 1 hour, right? That's I can trade. If this is a bearish order block on the 1 hour, I can take this bearish order block on this 1 hour, get tapped in on the next candle or whenever it taps into this, and I'm in the trade. The only thing you have to decide is where your exit point is, right? So, so my exit point was here. It didn't have to be there, right? I could wait. I could wait for it to bounce and push down further.
But you shorted it, okay.
It just depends on what your goal is, right? So this is a 1 hour chart. If it was a 15-minute chart, this is the same technique, right? And I'm to the point now as a trader, I don't have to put a box around. I'm putting a box around this so you can see, right? And the best way to do this is to use the entire wick of this green candle, right? Because when this price action taps in, you're in the trade. Your entry would go right here. This is where you would enter the trade. You would put your limit order. You would put a sell limit at this point. 135.18 should have been my entry. Mine was not here, but this is where a novice trader should enter. It would have tapped you in.
Wick at. I don't see the entire wick. You seeing it should have been the entire wick?
It should have been what? You see this wick? You see this wick right here?
Hold on. Let me take this off. Sorry. I was still on the screen. The entire wick. It's so damn. Oh, the bottom. Okay. I see it. I was looking at the top one.
So that no, this is where you want to make sure that you have your box. This would be your entry. It doesn't matter what time frame. It's a spot on the chart. The spot on the chart is 135.18. I don't care if you drop down to the 1 minute, your entry is 135.18.7, right? You see that? So once you know that, you go into your phone and you put your little limit order in. This next candle just so happened tapped you into the trade. So now you're good to go. Your stop loss would have been up here. You can use the bottom or the wick, however you decide. It doesn't matter. Whichever one is fine. Now this trade pushed down. My personal entry, I didn't do mine like this. My personal entry was 135.00. So I didn't get in this trade until it was right here. It was on this candle, right?
And where was your stop loss?
I didn't have a stop loss.
Oh, okay.
I'm not telling you to do this, but there are several confirmations that I already had on the trade. Is why I didn't use a stop loss. So we ran back up into the order block. We pushed into my moving averages. My moving averages are cascading. I knew that I had at least 50 pips to make my money. So if this trade would have pushed down to the 50, 50 pips to make my money, right? And it actually pushed down to the 60. So I got 40 pips. I got 40 pips out of this push down.
Nice.
Y'all see that? So 10 more pips, and I could have made 20 or 25% one. So this trade right here, one trade, it was right at 20% for me. The real trade is going up, but you see the area that I targeted, right? I didn't target the entire move down to the order block like I could. I targeted a small area because I wanted to go heavier and stack my positions, kind of like you guys do with wheel strategy. And the market pushed down, just kind of opened up, retraced a little bit, and pushed right down. And I got on the call, I think I placed my last stop loss for this red line, but I got on the call and it retraced up. But it's just because I understood that the market was going to push down towards my order block. This red line right here is the actual line that would close a fair value gap. And here's what I mean by that. The same way that you guys trades fair value gaps. So if I measure from this wick to the start of this candle, this is the 50% mark on the fair value gap. Notice my entry is right above there. So I believe that this price is going to push all the way down, tap me into the trade as it hits closes that fair value gap. Does that make sense to you guys?
Mm-hmm.
So you're saying that's where it's going to retrace to?
Yes.
Okay.
And the price, I expect price to push, excuse me, all the way down, close this fair value gap right here at this red line, and then the actual buy for the week will start. USD JPY is going to buy for the week. So Leandra, did you get that?
Did I get in that trade?
No, but I know you didn't get in the trade, but did you?
How do you know I didn't get in the trade?
You get what I was saying? Because
that's the same thing that I did.
You were on the call.
What, on the Saturday call? Yeah, but that's the same kind of trade that I did.
You were on the call this morning. On this call, you weren't in that trade, were you?
Probably would have if I woke up a bit earlier, but I woke up late today because I'm still sick. So
how do I close this up? Well, sorry to hear you're still sick. How do I close this panel out?
That bottom at that icon at the bottom to your right, where it's got that tool. Yeah, is it that one? That one?
Oh, hide sidebar. Okay. Yeah. So if y'all see, if you notice right now.
You don't say you're a boomer, gosh.
I am a boomer.
Or was it tapped into that bearish order block?
Well, yeah.
The 15 minute. Can you see that little green candle to the left, no, to the right, 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 up, slightly up, there you go. Is that a bearish order block there? It's tapped in.
Oh well, yeah, of course. But it tapped this or it responded to this order block first.
Oh yes. Bullish order block.
Moving average. So I expect for it to push down. And depending on how, how I feel, whenever it starts pushing down, I'll get back in the trade. I kind of want to show the swing trading group that that it's not as hard as they make it out to be. I mean,
you recorded this.
Well, yeah, I am recording this the call that we're on now, but they have problems, like anybody else, right? Like any new trading person. You see how this is a bearish order block now?
Oh yeah, and it's tapped into that other little bearish order block on the left.
I know, but now you have another bearish order block. All
yeah,
this,
I know. I'm just saying there's more confirmation.
Right, but it's just going to push down. So now is the time, like, that you would want to look at entering this trade for the push down. And here's another like 50 pips. $70 pips. So you don't need all 70 pips. You could just trade it down to this moving average. Like, y'all know from being in this US 30 group that the price is going to react at this moving average, right? The same way it does on the indice, price is going to react right here. So you could, if you got in right now and sold it, you collect 45 pips. And you could have it your way, like Burger King. You can trade it your way. So it's just, the way you view the markets as a trader is totally up to you. But as long as you recognize where you have the advantage, like this bearish order block right here at the moving average, it's going to sell. It's not even a question. It's going to sell.
It's sweeping liquidity. US 30 is sweeping liquidity right now. That's what we were talking before you got on the call. Sorry.
This is what I was talking about.
Yeah, I'm definitely gonna get into that US UJ trade.
Oh yeah, look, now you got Leandra competing with me, yeah.
Pardon?
I said, hey, Leandra.
Excuse me, you're the one that's now going intraday. You're the one that's now going intraday when you never used to go intraday before.
Hey,
then I showed you how I got that intraday trade on UJ last week.
I'm just trying to get that Leandra money, you know what I'm saying?
Oh my days. Well, you'll be buying the Cartier bracelet anyway, because at the moment it's not coming my way. The way my account's looking.
You said the way your account is looking. Your account is looking lovely.
No, it's not. Can't you trade for me?
You have that Louis Vuitton taste. I got that.
She is reaching.
At this point in time, I can't be bothered, man. It's just come this far.
Like, it's like you feel like you can't never get back out, even though you can. It feels like you can never get back out. It's so annoying.
Yeah.
I see the price turning around, right? You see the sale kind of stuff.
Yes. But
you can have your stop loss right here.
But yeah, I need to make my trading plan first before I can even enter any trades at the moment.
Okay, well, I'm gonna go ahead and enter this trade. You write your trading plan. I'm gonna write these dollars in my.
No need to. Yeah, now you'll be back.
Yeah, not talking spicy. I know.
Keita, that's why I said he's buying the Cartier bracelet, because right now.
He is talking spicy. You hear this, Tasha?
Show that candle again. What'd you say? Where it was.
No, but Kia, this is actually a good trade for you, because you could just like how far drawdown are you in?
I'm not in no $100. I'm not in no real drawdown.
Oh, I thought, what do you need to pass your test though? Pass your
no, my TFF start off, so they give you a retry, and they start you off with your flat 50K. So I have a 50K account, and it started today. I'm only like 100.
How come they give you a retry?
because I wasn't I had equity. I wasn't negative. I was 50
Yeah,
5,300 out.
as long as you're not in the negative, you're
Yeah.
good.
Yeah.
But listen,
So
this is
so
what
I'm a drawdown in my forex funds though. I'm like 3K in drawdown my forex funds.
you can come out of drawdown right now.
This could bring you back up. This trade
Tell
alone.
me what to do.
You're listening now.
Tell me what to do. I
Except-
was. You said that you was taking it down, right?
Yeah, you can sell this down. You can at least sell it to this to this
Jay?
That dotted line, yeah, that moving average, yeah, that
I can't
50%.
even see. I've been listening the whole time, but I can't really see. This thing is so damn tight. Your screen is so small, Todd.
This is 44. That's 44 pips.
What is it, UJ?
Yep.
So I don't understand how you know that it's done retracing right here. This little retracement.
It's in a retracement.
No, I know, but that little move right there where it went down and came back up and it's about to go back down. How do you know that it's about to go back down again?
Well, the which way is the market? What's the direction of the market? Down or up?
No, I mean at this particular time, you said that candle.
Look, this I mean, you got to look at market structure still.
Yeah, I know how. Yeah, I see that.
So if it goes up anymore, it's going to break your structure, right?
Right. Yeah.
So are you thinking that it's just going to break structure and go the opposite direction?
No, I just thought you said here's that. I thought you said something about this is the candle that's going to go down or something. And I was just like, how do you know that particular candle?
Well, it gave me a bearish order block at the moving average, right? So it's a great chance that the market is going to push down because it relates to the moving average.
Okay.
Now,
okay,
there's always a chance that that trade scenario is wrong, right? But if you go to the hour, you have this hour order block, price pushed up into it. It didn't quite tap in, but this candle is still a bearish candle on the hour. So you have our order block that supports your 15-minute order block. That's confluence.
What you taking it down to? What do you say you're taking it down to? I don't know.
You can take it down to this. There's a moving average on the 15-minute. This is what I mean by you have to trade the chart that you're on. So this is a 15-minute chart, right? You want to take it to the spot that's going to give you problems on this chart. So once price breaks down, it's going to come down to the moving average. You're not going to get interference until you hit the moving average. So this is where you can take it like without a queasy stomach.
I'm already queasy as negative.
Yeah. Hey, you know, I mean, that's if you're not willing to see red numbers as a trader, then you know you're in the wrong business because you're gonna see some red. And this is the thing, like even if this trade went against me, I would just hedge it.
Just hedge it.
So
what the hell is
the overall
I know, but
the overall bias for the trade is a buy. So if the trade goes against you and you buy it, you can just hold it for the rest of the day. This is a daily.
So what did you say? If the trade goes against you and you're in a sell, just hold it for a buy.
Just hold it, yeah. You
said if the trade goes against you and you're in it for a sell, just hold it for a buy. So that means you're going to be in drawdown.
Well, you hedge it, is what I'm saying. Y'all understand that? Like, this is what I always ask at 5 o'clock.
Up, you just start riding, buying it up with it. With it.
Y'all understand that you can press the buy and the sell button on y'all's app? Like,
yeah, I'm just playing with you. I'm just playing.
You know,
whoa, like he is spicy.
Hey, there's a buy and a sell button on your MP4. You're not locked in on one button. You know what I'm saying? I think that's important to understand. We're not locked in on one button. We got a buy and a sell. So
you do.
In this case, we know we're going into the trade. We're counter trend trading, right? We're counter trend trading because we think that the trade is going to make it down here and buy up.
Mm-hmm.
So it's fine. I mean, you don't have to panic. This is a tight stop or it's a tight area. If it breaks the area, then I can just take it for a buy right here. You could take it for a buy right here. You know, it doesn't.
Put this on my first fund. I'm in the negative. Don't make me more negative.
Hey, if you don't like the setup, then don't take the setup.
I
You know, whenever
put a 5.0. Was that too high? I don't trade.
Why did you put a 5?
I don't know because I don't trade currency pairs. I don't know.
Wait, y'all.
Oh my gosh.
Hold up, man. Hold on. You don't know how to get your risk management. You don't understand risk management.
Yes, but not on currency. It's totally calculated, totally different.
So different, isn't it?
So listen,
It's calculated totally different.
but to me, it's easier. A 5.0. So what do you have to lose right now? Like what percentage are you going to trade with?
Oh, percentage? I do not want to be negative 10%. I only have $1,800.
That's
But
How
you
you do it?
You have $800 to risk.
18.
Yeah.
18. Oh,
18.
So you got $18 to risk?
1,800. Oh,
Hold on.
1,800.
You don't want to risk everything on one trade, though.
I don't.
So that's what I'm saying. What are we risking? How much of the 1,800 are we risking?
Oh, I usually I calculated different. I usually do 3. I usually calculate there's 300 to 1,000 for reward. 1,000 to $300. That's how I normally do for US 30.
Well,
Is that when you're scalping? You normally risk that much?
No, when we're day trading on the US 30 sniper group.
Oh, okay.
Okay, so I think you're gonna have to understand how risk management works on pairs. Here's what I say. You know, as I'm getting in the profit on this trade, this is how I look at it.
Oh my god!
I just saw it going as a profit.
So look,
I already took my $10. So shush. I took $10 already.
Like when I start off trading my 50K account, I trade with 1%. I risk 1% of this account, right? So 1% is $500.
$500. Yeah.
So if my stop loss, right? If from here to here, let's see how many pips this is. Let's call it 10 pips, right? 10 pips is a what? 1.0? That's $10 a pip. 10 times 5. So I can use a 5.0 in this trade. Right. Because yeah, $50, it'll be $50 a pip. 50 times 10 is 500. So if you're risking $500
on a prop firm is not 5.0. It's $50, is it? No.
Yeah, it is.
Oh, that's because you want to pay.
Funds on the prop trading. Yeah, that's how much it is. Now, I mean, you know, the indices are a little bit different, but for pairs, that's how it works. Yeah, so if it goes 44 pips at $5 a pip, how much you gonna make?
It's at 400, no, 45.
I don't know. You got to do.
That's $50
No, is that 450 or something like that?
$50 a pip times 44 pips.
Right, that's what I just said. 50 times 44. That is $2,200.
Would you be out of your hole, or would you still be in a hole?
Damn near out my hole. I'll be like $6, $70, and
this is why I trade currency pairs.
What the freak is that? All right, I need a notebook to see this because I would have never. I thought currency pairs were way different. Like I didn't think 5.0 would be 50, and they move. Hold on, let me see.
Oh, now,
JPY
now they all right. Now the currency pair is all right.
JPY pairs are calculated different because it's the 0.64 is the pip count, right?
What do you mean 0.64?
Like the point after, not the 134 is not the pip count. You start the pip count from
You just, it's
0.62, right?
it's 2 decimals over. 2 decimals over.
Right.
It's-
So that's what I'm saying, 62. So 0.62, and that will be the 2 will be the pip count, right?
Right.
Okay. Yeah, I have to calculate that.
This is
You-
accurate right there. You see on my screen?
What's that?
That's a, from where I measure, it's a 47 pip move.
Right.
To your take profit.
Yeah. Now, I just told y'all earlier when I started this call, I told you that I could have taken this trade from where I took it from down here, right?
Mm-hmm.
Yes, sir.
I just got out early because I was getting on this call with Leandra. Now, I could have endured this drawback, this profit, this drawback, and I would be back in profit. You see how that works?
Why did you come out of the trade?
Why did I what?
Come out of the trade.
Well, because this is my version of scalping. I don't need to be in the trade while I'm on the call. You know, like I wanted to be watching my trade. And this drawback probably would have made me nervous anyway, because it broke through my moving averages. I don't mind pullbacks to just meet the moving average. I don't like pullbacks to go past the moving average, because then I got to go up, you know. But I mean, it all works out, and you know, you got to understand that on this scalp move, I'm using a larger lot size than I would normally use anyway.
Right.
So I'm trying to make that Leandra money.
Oh my gosh.
What?
Leandra, you be calling Todd on us like we be doing bad stuff. She be calling Todd on us. You make Todd get on this call. You bad. You be snitching on us.
I didn't tell him anything.
Oh, she can say y'all was doing that wrong. You know, she just
I
asked
didn't tell him anything.
No. I didn't know
because he can explain order blocks better than I can, and I learned it from him. But I wanted to show him this new way of order blocks. I'm sure it's like basically the same. It's just that, you know what I mean, I found a different way of like doing order blocks that suit me. Probably need to do more research on it, to be fair.
What, the fair value gap, yeah?
Pardon?
You talking about the fair value gap?
Yeah. Sorry, did I say order block? Sorry, I get confused when we talk about
it. The same thing.
Now I'm not in profit. But you know, I think on the indices you can trade fair value gaps better than you can trade them on the currency pairs. I think indices respect fair value gaps more than currency pairs. A fair value gap for a currency pair can last for years. You know what I'm
saying? Yeah, because sometimes it doesn't tap in, does it?
Yeah, and if you just trading off fair value gaps, then you'll be a pissed off person.
You gotta wait for confluence, haven't you?
Well, I think that it's also a matter of waiting for so you know how on the chart, what I noticed on the chart you were looking at, so you see how you have consolidation here on the chart you were looking at, it price broke out of that consolidation like on a one candle, right? So you have to wait for an expansion for it to be a tradable fair value gap. Every fair value gap isn't going to be a tradable fair value gap, if that makes sense. Does that make sense? Probably not. You just like,
of course.
It is. I've just got a bit of a headache, but yeah.
Well, I think it has to break a level. I think price has to go from this level down to this level. I don't think you can just trade a fair value gap based on the same level. I think that's being a little bit risky.
Yeah, there's factors to it, definitely.
Yeah, so I think there either needs to be liquidity right above your fair value gap, or I believe it needs to be liquidity right below a fair value gap for it to be a tradable gap. I really like chalk though. You know, I like the chalk aspect of trading. Are you guys familiar with chalk?
I
Yeah.
watched the video you did, but I guess I don't look for it. I don't know how to spot it right off. But I understood it when you say it when I watched your video, but
Yeah, I mean, I think the more you talk about it and look at it, the more you'll start to see it. And it doesn't necessarily have to be on every time frame, but the time frame that you see it on, I believe you can take the trade from it. And that was another reason, you know, when you look at this screen right here, it's just further confluence. Price was right here. This red candle pushes down, it breaks this low right here. See that? See where the red candle breaks structure, breaks this low? Then this green candle breaks this high. It broke structure again. That's called chop. That's letting the trader know that price is going to go up. So when you look at this, where does price need to go before it pulls back and goes up? It has to come at least to 134.30-ish, right?
yeah.
So that's why I'm looking for price to push down to this level before it goes back up. Now, on this chart, price got all the way to the wick of this candle. So that might be as far as it goes, but I'm going to wait and see. This is a bearish 4-hour, a bearish 12-hour candle if it holds up. But I think on the 4-hour time frame, we got a bearish candle too. Maybe it's 8. Okay, you got a bearish order block on the 8-hour. Price pushes down near our area. So I need to see if this next candle is going to push further, which it probably will, push further into our area before it retraces. So if you think about how price moves, you see the moving average right here? So I think this next candle, if this one doesn't push down, this next candle is still going to push down into the moving averages. I think you'll get a bounce here, and then price will push up.
Thanks, Todd, for the analysis.
Mm.
I'm waiting for this crap to push down. Give me my money. I don't like to see bullish order blocks on the 15-minute though. That's not a good sign. Ooh, I'm gonna have to hedge this at the top of this block right here. You know what bothers me about this, Leandra?
What bothers you?
What's gonna happen right here? you know, I'm almost forced to put a hedge trade here. But you got equal highs, which means this is gonna wick. Do you think that's gonna wick past there?
I don't know. See, that's what confuses me when you know it's in a retracement, but within the smaller time frames, you have the little smaller retracements. I get confused as to when I'm looking at, I know at US 30, when I'm looking at the different, I look at the 1 minute, the 5 minute, and I go back and forth sometime with the 15 minute, but the retracements, like when, do you pay attention to when it breaks structure on the 1 minute, the 5 minute, like which one?
So
That's what I get confused with.
there's no need to be confused. I mean, you might be confused at how high it's going to go, but your structure hasn't broke on the 1 hour. It still hasn't broke structure. The 4 hour hasn't broke structure. So I mean, you're seeing rejection. You're seeing rejection to these candles, but rejection is to be expected around these moving averages. I mean, you already know that because you trade with Will, right? Like this is the same thing
Right.
does on the US 30 when it gets close to a moving average. That's all we're seeing. We got resistance. You know, I expect for it to push through, but it's going to be a bumpy ride. So on this 1 hour, the same thing. I don't like to see this rejection, especially after this tap in. This is a tap in candle. It was great when it was down here. I thought it was just going to keep pushing. But because it didn't, maybe price runs these highs right here, right? But it can push all the way up, you know, into this level. There's an order block right here where you see this wick. It doesn't mean that price is going to change directions. It's just running people out of these positions.
Right. Because it's going to sweep them things out.
Right. Those equal highs that I marked up on the 15 minute, right there, they're going to get ran.
Yep. And you don't want to be in there with them.
Well, I mean, this is where I'm in there. So there's a choice that I have to make. And you know, I don't really have a choice. I have to hedge right here because my lot size is heavier, right? And so that means I'm going to have a negative sell position. And then once they run these highs that'll wick me into my buy position, I don't expect my buy position to hold up. I expect price still to turn around and sell. So if that happens, then I'll start cutting off my buy position as the price pushes down, right? What I could do is just not cut off the buy position and just let price push down to my entry. I can cut off my sell position and I can just let my buy position go back positive. I'm not going to do that though. I don't have that type of patience. I would rather just cut it off.
I thought you had patience.
Huh?
I thought you had patience. I thought you were the top patient trader.
Everybody has a limit. I mean,
patient trader.
You know,
he said, "How long is your job gonna freaking pay you?" 2 weeks. I got 2 weeks to trade. I'm like, okay.
There you go. What I can tell you is, I'm going to make a lot of money this week.
I'm getting on this fucking phone. I cannot. The cockiness. You got some cockiness on you, boy.
I'm just saying. I'm very confident in that. You know, like because I already know where. I know this is a bullish order block. It's going to go up.
And I'm confident you're gonna get me that Cartier. So
yeah, so look, this is what I was saying. All we
buying us all gifts. You buying us all gifts?
Yeah.
I mean, we stayed on this call till 12 o'clock. You deserve some gifts.
We put my order in.
Exactly.
Wait.
We stayed on a call with you till about 12 o'clock.
Hey,
about 12 o'clock. Listen to how cocky you get.
Hey,
how much money gonna make and how much money we ain't gonna make. because we ain't doing what you do, and how
Why-
much
why would you
patience
do
you
it?
don't got.
I think you can do it.
I'm saying what we not doing. That's
Well,
what we.
Why wouldn't you do it though?
Nobody said we not gonna do it, but
There you go. That's what I'm saying. Like it's all
I
all
have to make. I'm not confused with these US 30 pips, like indices pips, and how to calculate your risk to reward and
is different.
currency pips and risk. Oh, is that I would be toast if I try to mingle and jingle. That's not gonna be right. I'm gonna have to figure that out.
Yeah, I mean, I agree with that.
Yeah,
I
it
think
depends if you just trade like US 30 in the morning and then you focus on pairs in the afternoon or, you know, at a certain time of day. So, you know what I mean?
it probably does need to be like it needs to be clear for you. You know what I'm saying?
Mm.
I
Yeah.
wouldn't suggest you doing it if it's unclear because you don't want to blow your account because you didn't understand, you know, the difference.
Right. Right. I'm looking at this 3,300 for a sell on US 30.
Oh, thank you.
Yeah.
The patient trader.
For of patience.
You recorded this? Is
Yeah, it's recorded.
that right?
Yeah. Let me. In fact, let me.
Okay. I'm gonna look at it later again.